You don't need a 160 IQ to invest. What you need is what 90% of investors out there are missing. Money doesn't multiply through emotion. It grows through systems, discipline, and ruthless logic. Don't let media lull you with get-rich-quick fantasies. Don't enter the market like a moth to a flame and call it opportunity. In this video, we will destroy illusions, expose the most dangerous misconceptions, and rebuild your financial mindset from the ground up. This isn't a feel-good video. This is a survival map for those who want to last and win in the investment battlefield. Now throw away every belief you've ever had about investing, because we're about to dissect the financial world. No anesthesia. Investing isn't a game of luck. Most people enter the financial market thinking it's a lottery. They buy stocks like buying scratch cards. They chase whatever's trending. Reality? The market doesn't reward luck. It rewards those who understand the rules, think strategically, and dare to go against the herd. If you're investing based on feelings, rumors, or hype, congratulations, you're paying tuition to the market. The deadliest trap isn't a stock crash. It's the illusion of I'm about to hit it big without knowing what you're buying. Investing isn't gambling. It's preparation, research, dissection, like a surgeon with a patient. If you can't explain how the business makes money, where the risks lie, or what gives it an edge, you're not investing. You're flipping coins. And in that game, the market always flips. Want real wealth? Stop looking for hot tips and start building real knowledge. Investing is like building a fortress. Start with the foundation, not the flag. Be the calculated one. Research deeply and know exactly where your money goes. Markets reward vision, not speed. In this financial battlefield, survivors aren't the strongest. They're the ones who think deeper and move smarter. Never invest in what you don't understand. Imagine buying a business without knowing what it sells, how it makes money, or who it's up against. Sounds insane? That's exactly how millions invest daily. They buy stocks because someone said it's hot. They have no clue what the product is, what the company does, or who's running it. If you can't explain a company in one sentence, you have no business putting your money in it. Period. Just like you wouldn't drive a car without knowing where the brakes are. Don't buy a stock without knowing how the business works. Financial decisions must be rooted in data, not vibes. You need to know if the market still wants the product, what gives the company an edge, and whether growth is realistic over 5 to 10 years. No understanding, no investing. Everything else is just burning cash and sweet packaging. Try this test. If your best friend asks, "Why did you buy this stock?" Can you give a clear answer? If not, sell it. If you can't even convince yourself, don't expect the market to do it for you. Those who succeed can explain a company's story in plain words. If you can't simplify it, you're lost in a maze, and in that maze, the clueless always pay the price. Only the patient consume the market. The market doesn't reward tourists. It rewards the ones who stick around. Stocks may dip hard in a week, but real value takes years to emerge. Some think they're smart for cutting losses early, but they're just too weak to hold. Big profits don't go to the bold, they go to the patient. A price drop doesn't mean the business is worse. It just means the crowd is scared. Want fruit? Plant trees and wait. Long-term investing is like farming. You don't dig up seeds every day to see if they're growing. Great stocks need time to be recognized. Most people lose not because they picked wrong, but because they didn't wait long enough. They die from impatience, from fear, from listening to the crowd when prices shake a little. Getting rich isn't about IQ, it's about staying calm when others panic. A good company doesn't become bad just because its stock drops. Price is noise, value is voice. The patient investor is the one who withstands fear, keeps control, and trusts their research. Investing isn't for the jumpy, it's for those who know how to win slowly, deliberately. Calm is king when chaos strikes. When panic hits the market, the calm become kings. While others scramble to sell during a dip, the composed investor steps in to collect what's been discarded in fear. Volatility isn't the enemy. It's an opportunity wearing a terrifying mask. If you can understand that falling prices don't mean a failing company, you're already ahead. Nobody gets rich by screaming in a storm. Wealth belongs to the ones who walk through fire without flinching. Crashes, recessions, bad headlines, they're not bugs in the system, they are the system. The problem is not the event, it's how investors react to it. Most losers panic sell, driven by fear, not logic. They allow primal instincts to drive their portfolios. But the smart ones? They wait. They look for undervalued opportunities. Like someone who knows that after every storm comes a clearer sky. They don't run, they open their umbrella. A good stock doesn't lose its value just because the herd freaks out. It's simply mispriced. When others sell emotionally, you analyze rationally. Blood in the streets is when the best assets are on discount. Calm in chaos is your unfair advantage. A cool head is stronger than any chart pattern. If you control your emotions, you control your outcome. The market doesn't punish volatility, it punishes panic. Don't buy shiny, buy solid. High prices don't prove value. Just because a stock is hyped doesn't mean it's worth a dime. Media darlings and overhyped picks often burn investors the fastest. Meanwhile, that forgotten stock might be where true value lies. Don't buy what looks good, buy what holds firm. Prices flashing on a screen are noise. Real wealth is hidden deep in the company's cash flows, strategy, and dominance. Shiny attracts amateurs. Substance builds wealth. PE ratio isn't magic. It's a mirror. If you see distortion, the problem might not be the ratio, but your interpretation. A high PE doesn't always mean overpriced. A low PE doesn't always mean cheap. Context is everything. A growing company justifies higher multiples. A dying one isn't a bargain, even at a discount. Learn to read ratios in their proper context, or risk making rookie mistakes with professional consequences. The market will blind you with big numbers, explosive headlines, and thrilling stories. But none of that equals value. Real investing is grounded in hard questions. Is the company profitable? Is growth stable? Are operations efficient? If you can't answer those, you have no edge. Good companies don't need hype, they have performance. And if you can spot that before the crowd, you don't just invest, you outsmart. Analysis isn't optional, it's survival. Many think, it's just a small investment, I don't need to analyze. Huge mistake. Precisely because your capital is limited, you can't afford to lose. Every dollar must work smart. Lack of research is like driving blindfolded on a highway. You can't steer through markets without knowing where you are or where you're going. Analysis isn't a luxury for the rich, it's a survival skill for anyone who doesn't want to get wiped out. There are two types of analysis, fundamental and technical. Fundamentals are the bones, how the company makes money, how healthy it is. Technicals are the flesh, how the stock price behaves. Ignore either and you limp through the markets half blind. Wise investors use both. Fundamentals as the map, technicals as the compass. You don't need perfection, but you need enough direction to avoid cliffs and dead ends. Blind risk is suicide dressed up as optimism. Money doesn't flow to hope, it flows to competence. Analysis is how you show respect to your money. Don't rely on feelings, tips, or social media hype. Read the balance sheet, check the trends, understand the story. You don't need to know everything, but you must know the essentials. Markets don't forgive ignorance. If you want your money to work for you, start by doing your homework. Respect the process, or get crushed by it. Diversification isn't an option, it's a duty. Putting all your money into one stock is gambling, not investing. No matter how confident you are, risk always lurks. One earnings miss, one scandal, one policy shift, and your whole portfolio explodes. Diversification isn't lack of faith, it's understanding reality. Markets are messy, surprises happen. Smart investors don't rely on one bet, they spread risk. They protect the only thing that truly matters, survival. True diversification isn't random, it's deliberate. You spread across industries, sectors, asset types. When one fails, another holds. You don't need 50 stocks, just 5 to 10 solid plays from different ecosystems. Don't fall in love with one stock. Emotional loyalty has no place in capital allocation. If you build no safety net, the fall will be fatal, and no one will catch you, except regret. People say, diversification waters down returns. Wrong, it waters down danger, not vision. Real investors don't chase explosions, they build ecosystems. A double your money stock sounds sexy until it tanks and takes everything with it. Diversification transforms you from lucky guesser into calculated strategist. In this game of survival, control is everything, and nothing gives you control like having options on the table. 10 baggers aren't fairy tales, they're strategy. Most people think tenfold stock returns are unicorns, myths reserved for the lucky. Wrong. They just don't know what to look for. 10 baggers don't fall from the sky. They grow from businesses with explosive products, massive market potential, and scalable models. This isn't luck, it's a formula. But it's not for traders hunting quick wins. It's for long-term thinkers who plant seeds and wait patiently for the forest. Finding 10 baggers means going where others aren't. When they laugh, you research. When they ignore, you investigate. Your eyes should be on the ground, watching real-world signals. The cafe that's always packed, the brand teens obsess over, the tech you see everyone adopting. These clues don't show up on stock charts, they show up in everyday life. Only those who stay sharp outside the market can spot diamonds in the rough. A tenfold return won't come to the weak-hearted. There will be drops, noise, doubt, but if you truly understand what you hold, you'll stay in while others run. The strategy isn't buying cheap, it's holding on to greatness. Don't sell a gem just because it's still covered in dirt. Keep it, clean it, let time reveal its brilliance. 10 baggers reward the brave, not the impatient. Volatility doesn't kill. Greed does. Market ups and downs are normal. They're not a bug, they're the system itself. The danger doesn't lie in volatility, it lies in your reaction. Most investors panic at the first drop, not because of logic, but because of greed and fear. Volatility is when great businesses get mispriced. It's when smart money steps in, not out. Chaos doesn't kill you, but chasing a quick buck without discipline? That's a death sentence. The best defense? Regular investing. Set an amount, invest it monthly, ignore the noise. When prices drop, you buy more. When prices rise, you buy less. Dollar cost averaging smooths the ride. You don't need to predict the top or bottom, you need consistency. Investing routinely isn't dull, it's genius disguised as discipline. You don't have to outguess the market, you just have to outlast it. No investment climbs in a straight line, but many portfolios crash straight down because their owners couldn't stomach the first shake. The market will test you. A dip to see if you'll jump. A headline to trigger fear. The winners are those who stand still when the storm hits. They don't ride waves, they build lighthouses. Don't blame the ocean if you drown. Blame yourself for not learning to swim. Sustainable investing. Don't sacrifice the future for a quick win. Sustainable investing isn't a soft, feel-good concept. It's a hardcore survival strategy for the serious investor. While others pour money into toxic companies that exploit, pollute, and manipulate, smart investors seek businesses that are clean, ethical, and future-proof. Because dirty money may grow fast, but it collapses faster. Ethical companies may grow slower, but they last. And in investing, longevity beats flash. Sustainability isn't a logo or a checkbox, it's action. Does the company destroy ecosystems to cut costs? Does it fire employees during crises? Does it lie to investors? If so, it's not a winner. Smart investors don't fall for green branding, they dig into operations. Can this company survive future regulation, consumer shifts, and environmental change? If not, its chart is a time bomb in disguise. Every dollar you invest is a vote. You're not just buying stocks, you're choosing what kind of world you support. Back responsible businesses, and you help build a better economy. Fund corrupt empires, and you'll eventually pay for it. In conscience or capital. Sustainable investing isn't idealism. It's realism for those who want to be wealthy in a world that's still worth living in. Vision without values is just destruction. You don't need to know everything to win, but you must never get the fundamentals wrong. Know what you're buying. Stay calm through the chaos. Never let emotions drive your money. Stop chasing trends. Start building foundations. Real wealth doesn't come from lucky trades. It comes from disciplined strategy, unwavering patience, and cold-blooded decision-making. This market doesn't reward noise, it rewards those who move with intention. If you're serious about financial freedom, act like it, learn like it, invest like it. The market doesn't forgive ignorance, but it does richly reward those who show up with clarity, conviction, and courage. In the end, the battlefield belongs to those who stop gambling and start thinking like warriors.